Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update. We're going to be spending quite a lot of time talking about the DXY, the dollar, because the dollar is just refusing to roll over at this point. We are moving into tomorrow another rate hike. We're going to be talking about the dollar because there's actually every reason for the dollar to continue to actually advance, regardless of the epic run that it's already done. And this is going to have a negative correlation and effect on the cryptocurrency market. We have a large number of central banks coming out this week. The list includes the US, the UK, Switzerland, Norway, Taiwan, Brazil, Egypt, Turkey, Indonesia, South Africa, and many others below, coming out and actually also upping interest rates this week alone. This takes liquidity off the table. Remember, when you're talking about investing, when you're talking about markets, it is a liquidity game. Hate to do this to you guys again, but we're going to show you the money flow index once more. And I'm sure this won't be the last time I show it. Money goes up in terms of volatility. Volatility is probably a bad word. Velocity, or the money supply increases. Markets will go up on the back end of that, considering they are priced in the asset that is inflating. It makes a lot of sense, and we're now in very regressive territory that's going to continue to get even more regressive. And the thing is, even though these central banks like Europe, for example, are coming out and actually trying to catch up with the dollar and their sort of interest rate hikes, it's kind of at a slow pace. And you've got to also understand that there is far more inflation in the likes of Germany, for example. We're looking at the German PPI here, which came out, I believe, yesterday, or it may even have come out this morning. You can see an absolutely pretty horrific jump here for the PPI. This is going to weaken the euro. This is going to be bullish for the dollar. Bad for crypto. And we're going into a rate hike tomorrow. So we're actually expecting a spill pretty imminent. We've got this head and shoulders pattern that we're looking at. Very beautifully drawn, I must say, work of art. And this essentially is going to take Bitcoin, in my opinion, to sub 14K eventually. Now, yesterday we had put a foot below. This looks like we had broken this neckline, and we saw that sort of, I mean, look at this for a daily candle, guys. You know? And the thing is, typically before you get a spill, you do get some sort of strength to try and shake everyone out and hit all those stops before you grab that liquidity and take it to the downside. Maybe this was that attempt. I'm not saying it is. Just remember, just because I'm calling for a spill doesn't mean that it happened. And I think it's pretty imminent. Doesn't mean that it has to be. We spoke about the fact that you had a double peak over on this left shoulder. Maybe you get a double peak on this right shoulder. Maybe the CPI print. Maybe people take 75 basis points as bullish. It's not bullish, by the way. Although JPMorgan are talking about a bottom for the stock market and a very limited downside, I still believe that when you look at the stock market, and we'll take the S&P as an example, and we've been saying this for a very, very long time, the S&P is only down just shy of 20%. In my opinion, it's got to come a lot closer to 50% down. You know, if we look at March, or if we look at 2000 or the 2000s after the dot-com crash, it came down 50%. If we look at the 2008 financial crisis, it came down 58%. I think you're looking at least getting to 40%, possibly lower from your all-time high in a recessionary kind of fashion on the S&P. So I think you're looking at coming somewhere down here. Somewhere, seriously, looking at probably potentially round tripping, or it doesn't have to be. A lot of what was sort of added on during the printathon that came after March 2020. What does crypto do in that event? Well, it rolls with it, in my opinion, given the correlation. We've been looking very heavily at the stock market to kind of, give us some sort of direction for the crypto space. We're also looking at the dollar, which, like I say, in my opinion, I actually thought that this was going to roll. We said here, this is looking top heavy, and it did roll, but look at the strength on this. This strength, by the way, this big candle occurred on the CPI print, which came out at 8.3, and actually you had a marginally higher headline CPI print. Shows that inflation is still stubbornly high. Certainly in somewhere like Germany, it's even higher. That's going to firm up the dollar against the euro. Germany is a massive part of the euro's composite. And this encourages, in my opinion, and actually validates more dollar strength. We know why are we looking at dollars for anybody that's new to this channel? Look at the correlation. And let's, in fact, look at the short-term correlation. Let's drop down to a 4-hour. Look at this. One goes up, one goes down. So the dollar continuing to go up is going to be detrimental for Bitcoin. You can see dollars goes down, Bitcoin goes up. Dollar goes up, Bitcoin goes down. And what happens if this continues to shoot and sort of blows off the topper? You know, the FTSE started very strong this morning. It's come significantly down. You've got your futures market down. It's likely going to be a bad day. And I do think people are going to take risk off the table moving into the FOMC, which starts today and will, you know, obviously we'll get the actual rate hike decision tomorrow. And you can see there are a number of others like the US. Of course, we know we spoke about that. The UK, Switzerland, Norway, Taiwan, Brazil, Egypt, Turkey, Indonesia, and South Africa. And many others also looking to up rates this week alone. It's more liquidity taken off the table. This is another tweet from Gagavin. JPMorgan is calling a bottom in the stock market here. Thoughts? JPMorgan is saying robust earnings, low investor positioning, and well-anchored long-term inflation expectations should mitigate any downside risk in assets from here. Continued, even in the adverse scenario, we believe the Fed will be cutting rates by more than currently priced in for 2023, backstopping the equity market. JP Morgan have been wrong about many things. This is an analysis that's an analyzer that's essentially said this. You know, these guys could be significantly wrong, and I'm sure, you know, I can't remember JP Morgan calling 2008 or even the .com sort of bust. You know, they were very much still FOMOing people into the market. Now, one thing that I want to stress is if you do look at if you look at the fact that, okay, and we've done this 1,000,001 times, where you basically markets right now are just moving on interest rate pricing. Is this the 30-day? Yeah, markets are just basically moving on interest rate pricing. Well, what people I don't think have really took that much. I mean, look how correlated these are. This is not the best chart for me to show, actually. Yeah, this is the 30 days Fed fund rate future, and obviously you've got Bitcoin in the baby blue. Markets are basically just moving on interest rate being priced in. This goes down interest rate, meaning interest rates goes up for the 30 days Fed fund futures rate. What people I don't think are pricing in is serious risk on the table right now. You know, something like a Lehman's moment, because we're in that environment. It wasn't Lehman's that actually tipped everything over the edge. It was going to happen regardless whether Lehman's went belly up or not. And this is the same sort of situation that we're in. We're looking for somebody to blame right now. Is that what's going on with Russia? Who knows? Is it somewhere else? Is it something Chinese? You know, we know that the Chinese property market is under some serious stress. I think there's a lot that people aren't looking at in terms of risk. And as far as being an investor is concerned, not only is the environment crappy, but the risk is just too high to be throwing money in here. And I know the old saying out there that everybody loves to repeat, you know, buy when others are fearful, blah, blah, blah. That works when you have the Fed put behind your back. When the Fed put is no longer there and they're not willing to support you, you know, it doesn't paint for a very positive picture. But we will see. Markets are very irrational at the moment. It's been a hard day trading market. My hunch is that we do get some sort of spill, if not on the CPI or the run-up, the FOMC rate hike decision, on the run-up into it, or potentially after it, even if markets do see some sort of release. Maybe they see a little bit of release to Friday and then we dump. We will see. White House latest crypto framework lacks clarity, some say. It does indeed. I've read this. This was following the executive order that was given at the start of the year, talking about regulating the cryptocurrency market. It's very much President Biden recommends aggressive crackdown on digital asset related crime by the SEC and CFTC. You couldn't imagine him being aggressive in any form, could you? I mean, I couldn't. But whatever. So we'll see what happens here. We don't want regulation is the next part of adoption, in my opinion, but we don't want regulation that's going to be crippling to our industry, although there are going to be casualties. I do still, and I've always maintained this, I'm a big believer in the cryptocurrency market, a big believer in DeFi space and how it's going to merge with the CeFi space, the centralized finance kind of financial systems that we currently have. And we're seeing this with Compound. Compound is marrying a CeFi business model with a DeFi protocol. So when you combine CeFi and DeFi, you're going to get a far better product than just one or the other. There are arguments for, okay, just DeFi is better, but when you marry the two, you know, you're going to have a competitive advantage. You're going to be able to offer more. And this is, I think, going to attract, big money. We've already seen institutions use the likes of Compound and Aave. I think this is something that's going to continue and ultimately where I see the cryptocurrency market going. So that's really all I've got for you. What are we expecting today? Volatility is the only thing I'm kind of certain of. We do think this head and shoulders is going to play out. Go and check it out for yourself, guys. Invert it if you want, whatever you want to do with it. What are we looking at in terms of... We're not going to give you any shorts. We did get a short off on Uniswap, which we did quite well on Sunday night. But yeah, I'm going to love and leave you on that one, guys. If you've enjoyed the content, like us, always appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. If you want to check out my Patreon, there's a link in the description. Thanks a lot for watching, guys.